This is how it happens. Massive amounts of money being poured down upon the economy with no end in sight. They're not going to stop doing it. And the big money is starting to wake up to that. And whether you're talking privacy or safety from a sinking USS dollar, here's your life raft. So get it while you can, because I think the people are waking up to it. And that's part of the reason we're seeing such difficulty with supply chains. I really do. I think the large orders are making it much harder to keep product in stock for even a week.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. We have a returning guest. Andy Schectman, the CEO of Miles Franklin Precious Metals, is here with us for this weekly market update for Tuesday, October 19th, 2021. Andy, thanks for coming back on.
Super to see you. Thanks for having me again, Dunnigan.
Yeah, last time we got a quick update from you midweek. We had a big disruption in the supply chain impacting the British Royal Mint, and there were lots of flurry of questions around that. Can you bring us up to date on the latest on that situation? Because we were right in the middle of a major delivery for our weekly special last week when we got the rug pulled out from underneath us, but it looks like things are improving.
Yeah, well, we were able to get a little bit more than we had pulled out from our order. Basically, what had happened was that the Mint has run out of blanks for continuing production of the 2022 silver Britannia. And so the distributor here in the United States, who buys massive quantities from the Royal Mint, who had made promises to all the companies out there, not just ours, basically had to go back and say, hey, wait a second, we need to take back a little bit of everyone's allocation simply because the future is somewhat murky and unknown. We were able to get an extra 50,000 coins. We'll be able to continue that special at least for another few days until they're gone. The remaining coins were kicked out into the end of November. And look, as I've said ad nauseum, like the little boy who cries wolf, this is going to continue to happen, not just with the Royal Mint, but with all of them. You're dealing with a tiny, tiny segment of the population who's buying physical precious metals, albeit it's expanded, right? It's expanded a lot from what I'm used to, but it's still a small segment. And if it's this difficult for this small segment to get metal without running into these types of problems, when it becomes obvious on a much grander scale that this needs to be done, I think it will be the rule, not the exception. And so for what it's worth, we were able to get another 50,000 coins. I'm thrilled about another 50 or 60,000 at the end of November, at least as far as the 2022 Britannia goes. But get used to this as far as I'm concerned. I mean, all of you out there need to get used to this. This will continue to happen. It will happen with all of the major mints. And remember, as we've talked about before, there's so very little coming to us in secondary market purchases that when the mints run out of product, it's more or less, it's going to be difficult to get product because the secondary market's not providing us that supply chain that we would normally see on, at least enough to turn around and offer to other people on a regular basis. Right now, that's the exception, not the rule.
The other thing we want to circle back on is something we've talked about as a proposal. In fact, the word proposed or proposal has every single time we talked about it. And that's for about the past 3 weeks. We've been talking about the big $3.5 trillion Biden infrastructure bill that includes a provision that the IRS will start basically collecting a lot more detailed data at a much lower granular level than they have in the past. We've seen placating statements by Janet Yellen come out about this, saying, oh, this is just routine. We've had objections posted by industry groups representing the banking establishment saying this is a huge burden on the banks, increased reporting and intrusion of people's privacy for their financial lives. But it's always been couched in terms of propose. Today, in my inbox, I got from PayPal, you want to see this? It says, Dear Dunnigan, confirm your taxpayer status in order to take action to avoid disruption. It says the IRS soon will require anyone receiving $600 in payments for goods or services to confirm their taxpayer status and so on. This is not may, but will. So I don't know, somehow legislation that hasn't even been passed yet is already being told by us, we have to take action now or you're going to be disrupted. So a lot of people are really concerned about this.
And they should be. And it just goes to show that we're being lied to on so many different levels where, well, it may, but the banks are being told it is, so you might as well get your ducks in a row. And I don't know. I don't know why more people aren't up in arms about this. I think it's crazy. It really is. And this is part of the reason why we're seeing so many people I talk to every day lately. If there's one common thread to it, it's I don't trust the banks. I want to get my money out of the banks. And there's panic involved in it. And this is just another reason why, where there's such an intrusion of all privacy. But like I said, this is the foray into a digital currency. This is going to be, I believe, step number one into a digital currency, because the one objection you get with the digital currency is privacy. Well, they've been monitoring us anyway for all of this time. Who cares? That's what's going to happen next. And so it's coming. The digital currency, the cashless society. When Nancy Pelosi brought it up in March of 2020, saying that viruses could live on paper currency, I knew it was over. And they let the genie out of the bottle. They tell just enough so that they can fall back on it when it just slides on in, kind of like this, where they're telling us it's a proposal, yet PayPal is basically saying, no, it's not. It's for real. So another incentive, you got 3 months to do this before all privacy is gone. And if getting out of the system, getting out of the matrix with privacy is important to some people, then maybe we ought to jump on this a little bit sooner than later, would be my advice.
That was a viewer's question that was submitted the last time. People didn't realize when we did that live stream on Thursday afternoon as you were jumping on a plane or Friday, people were submitting questions during that. And one of the questions we didn't get a chance to answer was they were asking, how do you, looking forward as a bullion dealer owner, imagine life changing for you and for our clients if this $600 reporting rule goes into effect? And we've heard also a conflicting report that it's not per transaction. It's in aggregate at the end of the year, all the inflows and outflows rolled up for a given account holder. But I don't know. Regardless, do you have a view of how your life as a bullion dealer, or the lives of our clients who are trying to retain any privacy they may still have, will change under this law?
Well, I don't think it'll change my life at all, because, at least as far as business is concerned, because, if I send someone metal, that's not part of the legislation. It will have already been reported as an outflow from their bank. So we don't have the reporting requirements. It's the banks that get the money to us that would. I guess at some point you realize you're out of options. Now, one of the things that we wanted to talk about as well is, people talk about doing a like-for-like swap, and that's one way to not only lock in the tax loss, but also to get some stuff back without reporting. Well, in this same proposal, Section 138153, the wash rules for securities will now apply to commodities, currencies, and digital assets and prevent capturing tax losses while retaining an interest in lost assets. So they're even trying to close the loopholes where, you could sell your metal at a loss and buy it right back, or switch it to a different form in the same genre. In other words, you could sell junk silver and buy silver eagles. That's a like-for-like exchange with no reporting. That is no longer going to be acceptable. Little by little, the window is closing. And again, it's not going to affect my business because, or at least the way that we go about our business, because the reporting will come either as the money gets to us or from our bank back to the client if we were sending back a cash settlement from a purchase. Nothing from Miles Franklin itself. Any way you look at it, I think that this is emblematic of the times that we are in. It's another reason that being proactive in anything is important. It's another reason why owning metals is more significant than just what's on the surface. Having privacy in a world of diminishing privacy, increased litigation and scrutiny, doesn't matter if you're whistle clean. Just this country was not founded upon about intrusion of movement, freedom of movement, whether it be your personal movement, with the talk of taxing your driving with carbon credits and all of the things that are being thrown at us from every different direction, whether it be your ability to move about with freedom and you have to show a passport or a vaccination passport or whatever it may be. Our freedoms are being curtailed, and it's going to flow, I think, into the finance arena, as you can see, very, very quickly. In essence, we have a few months to do these things before there is no ability to move about financially without it being tracked. And have always tried to show people how to get right to the line of legality. Look over it, never step over it. And now that line has gotten a whole lot closer to us. So I don't think it affects us in our day-to-day. It's going to affect everybody the same way, whether you're buying whatever you're buying in or out. It's going to be before it gets to the retailer where the reporting will be done.
You mentioned in passing there people who want to do a like-for-like swap. We've had an extraordinary shortage of junk silver, constitutional 90% silver coinage, and premiums have been quite strong on those that are available. And you mentioned to me that, in fact, and it seems like about once or twice a year, you bring to us a distortion or an opportunity in unusually sort of unprecedented or unusual reversals of historical averages in terms of gold-silver ratio or premiums, that sort of thing. You were mentioning to me before we got started, this is one of those times right now.
Yeah, so I've seen one time in 31 years where you could actually sell your junk silver and receive a premium significant enough to walk away with more in the way of premium coins once for a very short period of time. An anomaly, if you will. Well, the anomaly is back in town, and we will pay people right now on a trade $4.50 over the price of silver to buy back junk silver. I mean, the name junk silver should be thrown out the window as well because it's not junk. In fact, at that rate, you're able to get 65 cents premium or 55 cents premium or 65, depending on what coin you're buying, between, let's say, 55 and 75 cents premium to put towards a purchase or a swap, if you will, like for like, which they're saying right here is they're trying to put the kibosh on, at least in terms of claiming a tax loss, if so appropriate. Walk away with more silver. And that's never happened but once. And when I mean once in 31 years. For a week or two, you could do the same thing, and it was in 08. Right now, the fact that you can sell junk silver for $4.50 over and buy a weekly special at $3.75 over, I mean, that doesn't happen. And when you talk about anomalies, this is 4 feet of snow in the Florida Keys in May. That's what it is. It doesn't happen. So for people who are sitting on a lot of junk silver, if they wanted to trade it and get back more ounces in brand new 2021 Philharmonics or 2022 Britannias, it's possible. And in all of the years I've done this, if you were to put it in terms of a percentage of time that I've seen, this less than probably 1/4 of 1%, 1/10 of a percent of all the years I've done this it's been like this. So in terms of should you do it? Hell yeah, unless you want to hang on to your pre-65 constitutional silver. If you have it in storage with us, beautiful. You can trade it all right now and walk away with way more in the way of ounces in brand new coins. It wasn't but a year ago, I don't remember exactly when, but you and I were offering these for 50 or 60 cents over the price of silver. The coins would have still been several dollars more. Right now, it's reversed. And taking advantage of price anomalies has been the secret to my success for 30 years. I mean, every time you see a price anomaly where, it's snowing in July in the Keys, that's when you take advantage of it. And I say that just as kind of tongue in cheek, but it's that unusual. And if you're looking for an opportunity to get a premium coin that normally sells at a large premium to the junk silver, this is as good of an opportunity as I've ever seen.
Again, putting these two topics together, anomalies in availability and pricing and privacy and reporting, another wrinkle that affects people selling significant quantities of constitutional 90% silver coins like dimes, quarters, etc., is that the 1099B reporting list includes that type of material. So if people sell, as I understand it, $1,000 face value or more in a single transaction, that would normally become a 1099B reportable event. But there's also this thing about like for like swap becoming a wash and not a taxable event. So can you clarify that for people?
Right. So as I mentioned, the wash rule, let me just kind of tie it all together. The wash rule, which section 138153 is addressing, is where with securities, you can't sell a security at a loss and you have to wait 31 days to buy it back. That's the wash rule, security wash rule violation, where you have to wait 31 days if you sold Apple if you sold Apple stock and you booked a loss, you'd have to wait 31 days to buy it or anything similar to it back, like IBM. You can't. You got to wait 31 days. With commodities, it's never been that way. Now, they're trying to tell us that they're going to eliminate that rule. It's in the proposal, and we see, according to PayPal, what proposal really does mean. And so if you're filing for a loss on the junk silver that you're trading, you got 3 months to do that. You'd have to wait 3 months to buy it back. Otherwise, the other coins are switching you into. In this case, even if you have, whether or not you have a loss isn't the issue here. It's you're trading an item that normally the junk silver. There are three items that trigger reporting on sellback in silver. Junk silver in excess of $1,000 face value, or bars or rounds, generic bars or rounds, not coins, but bars or rounds in excess of 1,000 ounces on one trade. So what this would allow you to do is a like-for-like exchange, where you're not selling it, you're trading it apples to apples. If we're going to gold, it would be apples to oranges, and you'd have to book that as a sale. It's not an exchange. But when you're going apples to apples, even if it's red apples to green apples, as long as it's an apple, you can do the like-for-like exchange, which is exactly what this would be. So you would trade, even if you had 10,000 face, you could trade it into Philharmonics. It's a like-for-like exchange. You keep your original cost basis of the initial purchase of the junk silver. So the cost basis carries forward, but the ability to do it without us demanding your social security number and filing a 1099B is the key to the transaction, and that you're following the law to the letter. You're doing everything on a like-for-like exchange without triggering a sell, which would then trigger a 1099B if it was over 1,000 face in pre-65 silver. Hope that helps.
And now part of this picture that you're mentioning, the economics of being unusually favorable for people who want to sell junk silver or constitutional silver in this current pricing environment where you can pay $4.50 over spot, is the availability of sovereign minted silver coins at less than that per ounce. So can you hit us with a weekly special that clarifies that?
Yeah, and availability, we should put in quotes. I mean, you see how fast things change. And we did a special last week, Tuesday, and on Thursday, I'm calling you from the airport saying, hey, the Royal Mint just ran out of silver. A year ago, we spent millions of dollars on Canadian maple leafs and called you and said the mint just shut down because of COVID. And I don't know when we're going to get our maple leafs. This is all very fluid. Everything is very fluid. But right now, yeah, there's great availability. Great being somewhat subjective also. I mean, I thought we had great availability in the 2022 Britannias, and we sold almost 90,000 of them in a few days. So the word is out on silver and the world is accumulating it. And these are very fluid times. They're times that keep changing and rapidly changing, and large purchases that are draining what is normally a supply that I look at as, well, we'll have that for a while. It's gone like that. It doesn't. Everything keeps changing, and my frame of reference, my recency bias needs to change with it, because I'm seeing things that I've never seen in 30 years. And the incentive to own metal, I don't think, has ever been greater, ever, at least in my opinion. And that's why when we talk about availability, yeah, it's good right now, but who knows what tomorrow brings. And I say that, then again, I try so hard to be sincere when I say these things. I'm not trying to say you better hurry now, it's going to disappear, to incentivize people to hurry up. I've been consistent in everything I've said for a long time with you, and I believe it's going to be the case, and we keep seeing it. I think it will. All of these types of things will define the marketplace. It will be the rule, not the exception. And but I will tell you that if I had a large amount of pre-65 silver, I would keep home just enough to suffice what I thought I would need for barter. God forbid that ever happens. And then I would trade the rest of it for these, because in all the years I've done this one very, very brief period of time in 2008 was a similar scenario. Most of the time, you're talking the difference of $2 to $3 an ounce from what you would sell junk silver back for versus what you could buy a premium coin for. And now you're getting more silver. It's snowing in the Florida Keys in July.
So what are we able to offer the premium silver coins for right now?
So as I mentioned, we were able to get 50,000 more of the Britannias, the 2022s. I don't know exactly how many we have left, but some. And those we're going to keep the special at $375 over. We're also going to do the 2021 Philharmonic. We have 50,000 in stock and another 110,000 due in next Monday. And those are the same $375 over the price of silver. Sealed mint boxes, the Philharmonics come in tubes of 20, boxes of 500. And the Britannia's tubes of 25, boxes of 500. I strongly suggest when people buy these coins that they try their darndest to keep them in lots of 25. Now, you're not obligated to do so, but one of the things about silver, if you've never owned any, or think about the old silver flatware that maybe your grandmother used when you went over for Thanksgiving. That stuff, sometimes you'll be there and you'll smell rotten eggs before dinner. Or the day before, because grandma's cleaning the silver with something called Tarnex. It's because silver tarnishes. And if you keep it outside of a sealed tube or a sealed anything, even if it's a plastic flip, it will tarnish. If you kept a silver eagle on your nightstand for a year, at the end of the year, it'd be almost pitch black. So keeping them in sealed tubes like this, silver eagles here, but in a sealed tube, it will stay till the end of time in mint, perfect, white, clean condition. So when you're buying these coins, if at all possible, try to always bump up or down to a sealed tube rather than somewhere in between. I think you'll be glad that you did.
So Andy, I know that we try to keep these weekly market updates tight. Appreciate your presence with us here. It sounds like we've got some real shifting sands, both on the availability side and in the supply chain disruptions. Tonight, we're going to be interviewing a insider in the trucking industry about his insight into the supply chain, but also on the shifting playing field of IRS reporting, privacy, tax, etc. And it sounds like there is a window of opportunity that's coming to an end here for certain levels of privacy that people have expected since the beginning of our country, and some rare opportunities here with some distortions in pricing. So always appreciate your presence here on behalf of all of our viewers.
I appreciate being here. I'd like to add one last thing. One of your regular guests, Gregory Manarino, the guy's awesome. There's something about him that I don't know, I find fascinating watching him. I love the way that he presents. And he did a podcast the other day, and I think everyone should listen to it. Basically what he was talking about was the retail numbers came in much higher. And he laughed at that, saying that this has happened throughout all of history when inflation starts to rear its head, that people are spending their money as fast as they can because it's losing value like a hot potato. And it really resonated with me. And I think that's what you're going to see. Then again, that's what you are going to see. When I think of product disappearing, and I think of big money realizing that inflation is upon us, that it's really here, that it's not transitory, that it's structural, and it's not going to go away. And supply chains are disrupted, and things are getting crazier by the day. This is how it happens. Massive amounts of money being poured down upon the economy with no end in sight. They're not going to stop doing it. And the big money is starting to wake up to that. And whether you're talking privacy or safety from a sinking USS dollar, here's your life raft. So get it while you can, because I think the people are waking up to it. And that's part of the reason we're seeing such difficulty with supply chains. I really do. I think the large orders are making it much harder to keep product in stock for even a week. And we have to keep reevaluating and changing, rolling with the changes as they happen. So anyways, just a shout out to Gregory Manarino. He's awesome. I think everyone should check him out, not only the previous episodes you guys have done, but also his blog. I'm a big fan, and what he talked about really resonated with me, and I think it's going to help shape the way that things are in this market.
Yeah, just corroborating what you just said, we just saw a retweet by Alistair McLeod over the weekend of another tweet saying that he's seen the beginnings of the crack-up boom. Austrian economics says that at the end of a spike in currency creation, you're going to see people doing exactly what you're describing. That's trying to dump currency for real things. And he says, yes, we're at the beginning stages of it. It's undeniable. So,
do I have time to read one more thing, or are we too busy here?
Go ahead.
All right, and that speaks to what you're talking about. And I want people to think about this. I'm going to read it a little bit slowly because it's fascinating and it really encapsulates where we are. So the crack-up boom is what Ludwig von Mises talked about in terms of misallocations of capital, and all this money that keeps pumped into the system and low interest rates creates distortions. So this is what Ludwig had to say about that. There is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as the result of voluntary abandonment of further credit expansion. Let me stop there for 1 second. Over over $1.4 trillion, $1.415 trillion the other night into the reverse repo market. That's not credit expansion, that's credit contraction. The banks like Wells and Morgan closing their lines of credit, that's not expansion, that's contraction. So, in other words, the banks are beginning to remove the credit expansion. So let me read that again. There are no means of avoiding the final collapse of the boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as a result of voluntary abandonment of further credit expansion, which we're seeing, or later as a final and total catastrophe of the currency system involved. Well, what's everyone talking about? The U.S. dollar is being destroyed by massive money creation and whatnot. So we are at that crack-up boom phase where price distortions and misallocations of capital are so pervasive in everything, from housing to anything, really, that everything's going up. Equities, cryptocurrencies, everything, commodities. Or is it going to be the banks just say, this is too scary now, we need to pull everything back? And that's why you're seeing record amounts in the reverse repo, record amounts that normally would go out into the system to expand credit are now being thrown into the Fed earning 5 basis points, and the banks pulling back their credit lines because I think they even realize, hey, this is getting to be a little bit too risky. So anyways, for what Alistair had to say, he's right. We are very close to the end of the crack-up boom. It's what comes after that's most frightening.
Yeah, 2 more things that echo what you just said. One is my wife and I tend to walk our dogs various places because they like new places to walk. And one of the places we walk is it's the most fashionable sort of outdoor mall area in our entire metro area. And almost half of the storefronts there have closed. We said like Joseph A. Banks men's clothing shop closed, restaurants closed, even national chains closed, things like that. And then they're building a brand new addition. It sat there during most of COVID. Coming soon. And now it's underway full speed. They're putting up this. So you talk about distortions and misallocation of capital, whatever, and even say what local bank is lending the money for this. It's like, you're kidding me. The same shopping complex that's got nearly a third to a half the stores are closed storefronts, and they have to put up those fake posters inside the windows to make it look not scary as you're driving by. And then they're building new at the same time. So that's one. Still the example of the flurry to spend the money while you can get it cheap. But on the other hand, we've got the opposite end of the spectrum where we've always been told by either Gregory Manarino or Alistair McLeod or others that the smart money moves first under misdirection quietly. So you've got here approaching what Alistair's calling the foothills or the beginning of the crack-up boom, you've got the banks pulling in their horns, as he says, and yet you've got Jen Psaki on the part of the president's press secretary saying, oh yeah, retail prices going up. Well, that's good. That means people are spending money. So it's good that the little people are out there spending their money. On the other hand, the banks, the smart money, are stopping extending credit. So,
well, what else did she say? She said a $3.5 trillion infrastructure bill will cost nothing. So we're being lied to. And it's time for people to wake up and realize it. And your opening picture of PayPal saying they will collect this, but we're being told it's a proposal is it's a crystallization of what I'm saying. We're being misfed information. We're being all herded into a pen. And what we're trying to do is give people freedom from that herd mentality and take a step out and go sit up on the cliff and watch it all happen. If you're protected, you have the ability to do that. So anyways, for what it's worth, I appreciate being here. Dunnigan, I know we've gone a little bit longer than normal, so I'll say goodbye for now. And unless something crazy happens, which you never know, we'll look forward to seeing you next week, Tuesday.
Sounds good, Andy. Thanks for joining us on behalf of all of our viewers.
My pleasure. Stay well.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.